Hey guys, it's Sasha. Something big just happened and I wanted to quickly make a video to tell you. China has just announced that they plan to ban Chinese companies from going public in other countries, including the US. This is huge. If you are an investor in Chinese stocks right now, or if you're interested in popular companies like Nio and Tencent, listen up, because this is important. There is a caveat in this announcement. The Chinese government has said that they will only apply this to companies that process sensitive and important data. But I actually think this is more of an excuse, because if you think about it, which Chinese stocks don't process sensitive or important data? Now, the truth is, it is looking more and more like China wants to protect Chinese interests and ring-fence their entire industry to keep the wealth and control over Chinese manufacturing and technology. And this is in some ways a strange move, because Chinese companies get a lot of benefits from being able to list on US stock exchanges, as has become actually quite popular over the last 24 months. Those companies get access to the biggest market in terms of the ability to raise funds in the world. But if you've been following Chinese stocks closely, then this really should not come as much of a surprise, because this has been brewing for some time. In a recent video on another topic, I actually explained in quite a lot of detail what the risks of investing in Chinese companies are. And the biggest risk that I talked about was the Chinese government declaring foreign ownership to be against the rules. Because, well, it actually already is. There are already laws in China that do not allow foreign investors to own Chinese businesses. Tesla had to jump through a lot of hoops just to open their own factory in Shanghai. And it looks like that risk is now coming through, and this may be the first step. Now, Chinese companies that were waiting to IPO or had their IPO pulled at the last minute will no longer be able to access US funding, and this is a big problem. And the ability of foreign investors to invest in Chinese stocks that only trade in China, which is now going to be the case, is extremely limited. Those US ADRs that people like that replicate foreign shares don't really work in this scenario. Now, as China has threatened action over the last few months, the market has reacted. Companies like Alibaba and other Chinese stocks have had huge drops in their share prices, and investors were at some point flocking in and buying in the dip. Even Cathie Wood, who initially sold off her Chinese stocks only a few weeks ago that happened, she actually came back this week and bought some of them back. She did a U-turn, and so ARK went buying the dip as well. Except the problem is that that dip has only been getting bigger, and this news is really not going to help. Chinese stocks are already dropping like flies in today's trading on this announcement, but it could get much worse, because if you take a step back and look at it, is this really where the Chinese government is going to stop? You know, ban all future IPOs, but companies that are already publicly trading in New York are just okay. We are gonna go and leave them alone, right? Well, I am not so sure. I'd say that the risks that I talked about for anyone holding Chinese stocks in their portfolio just got a whole lot worse. They got a whole lot more real. Because remember, if you think that you are invested in a Chinese company and you live in the United States or in the UK or somewhere else, that isn't actually the case. The shares that you own are not shares in that Chinese company that you think you're investing in. Instead, the shares that you own are shares in the Cayman Islands or some other random holding group that happens to share the same name as that Chinese company. That holding group will then have a whole load of very obscure ownership chains that flow down. They will own some companies, they will own some other companies, sometimes in different jurisdictions, blah, 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 that eventually get down to some companies at the bottom that have a contractual relationship with that Chinese company that you think that you're invested in. Yeah, they don't own that Chinese company, because that would be breaking Chinese law, but there is a contract, and that company at the bottom of that chain is technically entitled to money distributions and things like that. But the problem is, you are not a shareholder. You have no shareholder rights. You have no privileges, no legal repercussions. You have no shareholder benefits in reality, other than watching the stock price go up and down. Now, if the Chinese government tomorrow turned around and banned this setup outright, the value of your shares in that Cayman Islands company would be zero. And given what we are seeing, I would say that although that risk is low, it is definitely not negligible. And I don't know about you, but I personally don't like having investments where there is some material risk of that investment going to zero because the Chinese government just decided so. Now, all of this is going to drag on for some time. This is not something that is probably going to unveil itself over the weekend. These new rules will apparently only be implemented sometime in Q4 of this year. And if China continues along this path, then any further updates will probably take even longer than that. The big question is what those further developments actually will be. Will Chinese companies be forced to delist? And if so, how will that happen? How will operationally that actually take place? What is going to happen to the share prices? It's hard to tell because we haven't really had examples of this sort of thing happening before in this way. But in other cases where a company is forced to delist for legal or other reasons, the outcome for shareholders is usually pretty grim. Now, to make this issue even worse, the US Securities and Exchange Commission has been making noises themselves recently as well. They seem to share my view that investments in these offshore holding companies that are nothing to do with the Chinese company that you think you're investing in are not as kosher and transparent as perhaps they could be. So the problem gets deeper because even if the Chinese government does not do it, the SEC could. They could go and ban Chinese companies from trading in US stock exchanges, potentially existing ones as well, but will they go that far? I don't know. I'd say it's probably unlikely, but if China continues pushing further, if there is a trade war, who knows, if something else develops in the story, the SEC's hand might be forced. Now, take a step back. The stock market is a difficult beast in the best of times. But here, on top of all the other risks that already exist in the market, we have this really serious existential threat to Chinese company shareholders that seems to be getting more serious every week. And the problem is that even if nothing happens, as an investor, I don't want to invest in something that will make me worryingly check the news every day wondering if the day of reckoning has finally arrived. Now, I do not hold any Chinese stocks for this exact reason. I have nothing against the country or the companies. In fact, I really like and I'm really interested in both in my normal life. But as an investor, managing your risk is crucial, and eliminating serious risks as much as possible is a sound strategy. And I have a feeling that Chinese stocks may continue suffering because of this aura that is surrounding them as a result of all of this for some time yet. Thank you very much for watching. I hope you found this useful. I really appreciate it. And as always, I'll see you guys later.